As the second month of this year is wrapping up, the prices in the crypto market have somewhat recovered from last year's crash. Still, the so-called Alameda Gap resists filling, as the liquidity remains far from the levels seen before the infamous FTX collapse. Researcher Kaiko tweeted that this month as well, the gap persists, with Bitcoin, BTC, market depth still well below November levels. It stated that, the quantity of BTC-USD, bids and asks within 2% of the mid-price aggregated on 16 exchanges hovered around 8k BTC in February, 40% less than. Kaiko noted the existence of the Alameda Gap that very same month, arguing that, typically, liquidity plunges occur during periods of volatility as market makers rush to manage risks. Crypto liquidity is dominated by just a handful of trading firms, including Wintermute, Amber Group, B2C2, Genesis. With the loss of one of the largest market makers, we can expect a significant drop in liquidity, which we will call the Alameda Gap, it said at the time. Riyad Carey, research analyst at the company, was quoted by Bloomberg on Friday as saying that, "It's not just Alameda, although they were one of the biggest. Other market makers took a hit and are being more cautious. Opening square bracket. It really depends on the token, but I'd say there's still a 20 to 40% gap from previous liquidity levels. When there's less liquidity, we tend to see that prices are more volatile in both directions, which has been the case in the past couple months." Strahinja Savic, head of data and analytics at FRNT Financial, was quoted as saying that 3 Arrows Capital, 3AC, Celsius Network, and numerous other. Therefore, the trading volumes drop at the end of 2022 can likely be tied back to the elimination of these companies. These firms would have policed spreads, keeping them at bay, and supported market depth, but their fall resulted in an increase in certain inefficiencies in the crypto market. All in all, according to Noelle Acheson, author of the Crypto is Macro Now newsletter, thin liquidity suggests that larger traders are not back in the market.